All right, the bubbles are red. I'm going to concede. The bubbles are red. It's not looking like a great day. We do have Bitcoin coming down a little bit, 30,248. And I think it's like the post 4th of July hangover come down for Bitcoin. That's what's going on here. In fact, I will actually show you why I think the market's going down. It's nothing unexpected. It doesn't change the long-term thesis. The long-term thesis remains exactly the same. The long-term thesis is that we are in a raging bull market. We are in the beginning of a new cycle. This cycle is going to be very different from the other cycle. If you're not positioned well for this cycle, you're going to get wrecked. You're going to get taken out of the market, because by my calculation, only 5 tokens are going to survive the bear market. That's it. Only 5 tokens are going to come out in the next cycle. I'm going to show you where I got that data. And if your portfolio is currently sitting in tokens that are not in the 5 tokens that are going to survive the SEC attacks and this new cycle, then probably your portfolio is going to go to zero or get wrecked. But if you are in the right tokens, then I think that you can actually make, let's call it life-changing money, wife-changing money, whatever you want to call it. That's what we're going to talk about today. I'm also going to show you, I'm going to talk to you about my BCH position. I played this one brilliantly. Okay, so I saw that so this is what I saw. I saw that the Korean traders actually went to a new token called Storage. So Storage is a 2017 token, and the Korean traders started to pump this token out of nowhere today. Then I realized if they're pumping this token, they've forgotten about BCH. So what did I do? I sold my BCH completely, $275 out of the trade. And then, like the true degen that I am, I went short. So I caught it on the upside, and now I've caught it on the downside. I'm up. I made $100,000 on the way up, and now I'm up $10,000 or $9,000 on the way down. As you can see, I opened 1,000 BCH short position. I opened the short at 268. Trading now at 259, so another $9,000. I played this one absolutely perfectly. Yeah, so I mean, it was an unbelievable trade. So listen, we've got a big show here today. We're going to go through a thesis to decide which tokens are going to survive, which tokens you need to have in your portfolio. And if you don't have those 5 tokens in your portfolio, well, I wish you guys the best of luck then. All right, we're back, and we've got a big show today, post 4th of July. It's the 5th of July show. It's the hangover show after the 4th of July. Tell me in the comments if you've got a hangover, if you've got like a post 4th of July blues. Let me know about it. I did see some of my American friends partying on the 4th of July, posting pictures. Let us know in the comments. If you did that. It's a big show today. We do have to talk about the 5 tokens that are going to survive this bear market, or this new cycle. I'm not going to say the bear market, because I think we're long out of the bear market and we're very much in the bull market. And I want to show you which 5 tokens I think are going to survive. We're actually going to go through the exercise together. We're going to do it here together. And we're going to work out which tokens are going to survive and which tokens aren't going to survive, because there's many headwinds that are coming our way. The first headwind that is coming our way, we have regulation. We have the regulatory headwinds coming our way. Gary Gensler is out after us, trying to kill everything that is possibly a security. Then we've got just protocols that are going to die because they don't have money. We've got to look at all the different options, and then from that, we've got to decide which tokens are actually going to survive and what your portfolio should actually look like. So I know it's not the nicest thumbnail. I know it's not the nicest thing to face, especially if you've been holding these tokens and you've become emotionally attached to these tokens. But I think we've got to have a real discussion. I think we've got to have a real heart-to-heart discussion about what we're holding, because we get emotionally attached to tokens. And that's, to me, honestly, the biggest mistake that I've made is becoming emotionally attached to tokens. In fact, when I think of this BCH trade, I must be honest, at like $320, I started to get emotionally attached to BCH. I started to try and convince myself that maybe the Koreans will make BCH into the new Bitcoin, or will tell us that BCH is a new Bitcoin. That would take it to from $330 to maybe $3,000. But then I detached myself from the attachment. And I said, don't be emotionally attached. This is a bunch of Korean degens pumping up a token. And when they stop pumping up a token, they're going to move to the next token. And that's exactly what they did. And that's what we need to get into our heads here. We have to break away from this community nonsense, from this, I love Cardano, I love XRP, I'm a Solana Maxi, I'm part of the community. The token doesn't care whether or not you're part of its community. The market doesn't care which community you're part of. The market only cares about what works and what doesn't work. And I've got a whole lot of criteria, which we're going to talk about to align our portfolios to do it. So if you're here, smash that like button. I see only 315 likes. Is it my hair? I mean, what is it? Do you not like the collared shirt? Or what is it? Standing here isn't making sense. Or is it, what is it? It looks good. I don't know. So why is it only 320 likes? Is it because we started late? I don't know. Standing here is not adding up. Anyway, let's quickly go through the markets. If you are a member of the fam, just smash the like button. If you haven't already subscribed, we are growing extremely fast. We're on 639,000 now. We're going to be on 640,000 by the end of the day. I guarantee you. Let's go. Let's go. Okay, so first of all, let's take stock of where we actually are. We had the 4th of July yesterday. Markets were closed. Came back today. Markets down ever so slightly. So the Nasdaq's down 0.07%, ever so slightly. The market is getting nervous. The reason why they're getting nervous is because we have been in this raging bull market since January. I did show this to you guys yesterday. We can look at it again for those people who were off for the 4th of July. But if you do look at the Nasdaq from the 30th of December until today, 41% up, give or take. So the markets are getting nervous. People are saying, hold on a second, the markets run 40%, the Nasdaq's run 40%. We'll probably see some kind of pullback. And if you are looking for an excuse to find a short-term temporary pullback, here's a great excuse for you. The excuse is that if you look at the Cleveland Fed, and these guys are pretty good at forecasting inflation, what they're saying is that the July inflation is going to be higher than the June inflation. So we're going to get a slight acceleration in inflation from CPI from 3.22 to 3.54, core from 5.1 to 5.22. So what does that mean? It means inflation is going to go up. If inflation goes up, what does that mean? It gives the Fed the ammo that they need to raise interest rates. So right now, you'll remember that I said, I don't think we're going to get another interest rate increase. I think now there's an 86.2% chance that there is going to be another interest rate increase. When we get CPI, the CPI number is probably going to go up. That's going to give Gary Gensler a whole lot of ammunition to increase interest rates. So I think I have to start conceding now that the interest rate cycle is going to have one more rate increase. And I guess that now I'm changing officially here today on the show, I'm changing my outlook to say there's going to be one more interest rate increase as per the market's predictions, and we're not going to get any rate decreases for at least the next 6 months unless something breaks. That's why maybe the markets are slowing down a little bit. But this little slowdown, this little glitch, this little little bit of inflation doesn't change the long-term thesis. The long-term thesis is very, very simple. I keep my thesis. What is the thesis? We are in a raging bull market globally. Nikkei's up, Nifty at an all-time high, Nasdaq up 40%. We are on a raging bull market globally. Bitcoin also in a raging bull market globally. In fact, even crypto in a raging bull market. But this is a different bull market. This bull market is driven by institutions. It's the first time that I can say, put my hand on my heart and say, this bull market is actually driven by institutions. I've been here since 2015, 16, 17. We've always spoken about the days where the institutions are going to come in and pump our bags and buy our bags and whatever else. And I can tell you that this is the first time where it's actually really happening. You can see it on the chain. You can see it off the chain. Let me show you some of the things that I'm seeing. So number one, I showed you all of this yesterday. I showed you that the market's getting heated and that there is more leverage coming into the market, but the leverage is coming in the form of calls and puts. Now, today, retail investors aren't the ones buying calls and puts. As much as we are trying to teach you, and we have a partner in 𝗕𝗏𝗃, and we'll continue to educate you, it's not retail investors that are aping into calls and puts. One day it will be, okay? We also see that the liquidation, that the leverage is starting to go up. Now, I saw this leverage chart at the moment. Now, this leverage chart looks a bit scary, especially when you overlay this leverage chart against the price of Bitcoin. So the price of Bitcoin right now, 30,258. And if I look at this leverage chart, you can see that there's heavy leverage just under this. So there's 100x leverage, there's 50x leverage. You see the 50x leverage is yellow, 100x leverage is orange. So there is a whole lot of leverage here. Now, that means that if a price comes down, we could see a little bit of a hit on the Bitcoin price. But anyway, going back to it. So we're in this raging bull market. The raging bull market is driven by institutions. The institutions are not buying spot. What they're doing is they're using sophisticated instruments like options. So you can see here, for example, on Ethereum, the spot to futures volume is down, which means that there is more futures being traded than spot, which means more institutions are coming into the market. Okay, we're also starting to see some flows back into the ETF in Canada. You know, the 𝗕𝗏𝗁 ETF in Canada? Look at the inflows into the 𝗕𝗏𝗁 ETF in Canada. Who's buying that? Obviously in the institutions. If you look at the options, as I said to you, you see we're in this market that is being driven by options, and options right now are not a retail instrument. So what am I trying to show you guys here? Right now, this is an institutionally led crypto run. And in an institutionally led crypto run, it's the first time that we've seen this institutionally led crypto run. I think that what they're here for is they're here for the BlackRock ETF. They all now believe that BlackRock is coming in. But regardless of that, once the narrative has happened, even if the ETF doesn't get approved first time round, or doesn't get approved anytime really, really soon, it doesn't really make a difference, because these guys are now going to be in here. The price is going to go up. As the price goes up, the asset becomes more attractive in their portfolios, and they get more vindicated for holding the asset. It's like, imagine you're a fund manager and you bought Bitcoin because you thought the ETF was coming. Bitcoin runs from 30,000 to 37,000. You got 25% return. You look like a genius. What are you going to do? You're going to buy more crypto because that makes you look like a genius. And then it starts to self-perpetuate the cycle of institutional returns and institutional FOMO. And then institutions start to be negligent if they don't have crypto in their portfolios, and then that sparks a whole new level of FOMO. So I maintain that thesis. I maintain that we're in this new cycle. I maintain that this cycle is an institutional cycle. If you don't believe in the cycle, if you think that the institutional cycle is garbage, then you could take this 𝗕𝗏𝗃 side of the coin. He says, if you think, he doesn't think an ETF is going to be approved in 5 weeks. I must be honest, I agree with him, it's not going to be approved in 5 weeks. But what you can do, if you don't believe it, you can go short and say, look, I believe that this whole market's being too optimistic about an ETF, that all this run is about an ETF, and then you can just go short. I wouldn't do that, because I told you, I think that we get FOMO and everything else that happens, and then it just keeps self-perpetuating this institutional cycle. So that's where I think we are when it comes to the new cycle. I also think we are in a room that's very hot, because I think James forgot to put on the air conditioner. So we are dying in here. It's very hot. Whew. Don't worry, he's putting it on now for us. All right. Look, I said, I think we're going into a new bull cycle. I think that this bull cycle is going to be very different from previous bull cycles. I think that a big problem that everyone's got is we're all holding tokens of the old cycle, and we are expecting the tokens of the old cycle to recover, and we're expecting to make money on the tokens of the old cycle. And this is a big problem. I looked at my portfolio a few weeks ago and I thought exactly the same thing. And I asked myself a very important question. I said, are the tokens that I'm currently holding in my portfolio ever going to recover? And I did my best to empty out, to completely detach myself from the emotion and say, bullshit aside, are the tokens actually going to recover? Yes or no? And what I did was, I actually came up with a spreadsheet, a methodology, a model that I want to share with you guys today that we can work through on all of our tokens and decide whether or not the tokens are actually going to come out of the other side of this and actually make an all-time high. What got me thinking about that was this thing over here. So this is the 17th of December, 2017. It is the peak of the 2017 bull market. Here it is, okay? So here's that's the peak of the 2017 bull market. Bitcoin just hits $20,000 or 19,000 and change, okay? And what I did was I took a snapshot of the biggest tokens on the market back then. This is what it looked like. You had Bitcoin, Ethereum, Bitcoin Cash had a market cap of $31 billion. Okay, where is Bitcoin Cash today? Let's just quickly go here and just quickly find Bitcoin Cash today. Remember, it had a market cap of $31 billion. It's now got a market cap of $5 billion. We are now 6 years later. 6 years later, this thing's got 1/6 of its market cap. Then you look at some other ones. Litecoin had a market cap of $17 billion. Today, it's got a market cap of less than half of that 6 years later. Okay. Then I looked at things like XRP. Okay, we'll talk about XRP separately. IOTA. Wow, there's a name I haven't heard for a long time. IOTA had a market cap of $10 billion. Where is IOTA even on the list here today? Let's see. The IOTA. Of course, it didn't break the all-time high. It's got a market cap of. Where is the market cap here? Yeah, but where is the market cap today? Let's look at the market cap today. Market cap is, well, it's 18 cents versus, what was it? It was $3.92. So what I'm trying to show you is that if you look at the old cycle, the 2017 cycle, and you compare it to where we're at today, most of these tokens ain't going to make it out alive. Most of these tokens never made it out alive. Tokens like Dash. Where is Dash on this list? Come on, Dash was like one of the, I mean, we bought so much Dash in the day thinking that Dash is going to reinvent money, and Dash is nowhere to be found today. You can't, I mean, wow, we're moving further and further and further down. Oh, here it is. It's got a market cap of $400 million. In 2017, Dash had a market cap of $8.5 billion. So I think you're getting the point here. Most of the tokens that were in the previous cycle never, ever, ever made a new all-time high. In fact, we tried to make a list of 2017 tokens that actually made an all-time high in 2021. Here's the list. Bitcoin, Ethereum, Litecoin, Sandbox, Doge, XRP, ADA. All these tokens were around in 2017 and actually landed up making an all-time high. 27 tokens. 27 tokens out of 10,000 or 20,000 tokens. I don't remember the exact number because the number, there were so many tokens that were launched in 2017 actually made it out and made it out the other side. That is less than 0.01% of tokens actually made it out the other side. And it's going to be the same this time around. In fact, let me show you something that's a little bit more scary. When you see this, it'll make it even more scary for you. These weren't protocols and companies that were raising 5 million, 10 million, 20 million. These were protocols that raised huge amounts of money. Huge amounts of money. Filecoin raised $257 million. Tezos raised $232 million. EOS raised $4 billion. I'll show that to you in a couple of seconds. Bancor raised $153 million. I'm actually willing to guarantee you that the Bancor market cap right now is lower than the amount of money that they raised in 2017. Let's see if I'm right. Let's see if I'm right. Without putting any dampener on my friends at Bancor. What's the Bancor token? Yeah, BNT, that's what it is. Market cap today, fully diluted 58 million. In 2017, these guys raised over $150 million. They raised $153 million. These were serious protocols. Kin doesn't even exist anymore. It raised $98 million. Electronium, I remember Electronium, $40 million raise. They raised a whole lot of money in 2017. And today, when you look at these tokens, they ain't gonna, they just don't exist. There was another one, which I thought just probably worth showing you guys. I don't know how many of you were here. If you were here in 2017 and you remember, what's his name? Carlos Matos. Carlos Matos is his name. Okay. I don't know if you guys remember this, but if you do, you're real OGs. BitConnect.
What's up, BitConnect?
I mean, this was 2017.
Hey, everybody. My name is Carlos Matos, and I am coming from New York City, New York.
Okay, Carlos Matos. Now, this guy was running a top 15 token, right? He was in the top 15, was he?
That was 12 on the 17 all-time high list.
Okay, here it is. That token had a market cap of $2 billion. It was an absolute scam. I mean, I think he got taken down by the SEC. I don't know if he actually went to jail, but it was an absolute scam. The whole everyone came down on him. Anyway, why am I showing you this? Because I think that this cycle is going to be no different. I think that if 0.1% of the tokens that started in 2017 actually survived and made all-time highs, this market, the same thing is going to happen again. And that is because when cycles change, you need to change your thesis. You need to be prepared for the new cycles. I want to show you something over here, which I think will show you something. If we want certain tokens to beat their all-time highs in the next cycle, there's a massive job to be done. Let's look at what the job to be done is. Bitcoin has to beat 60, I think this is wrong. I think it's 69,420, right? 69,420. ETH has to beat 4,800. XRP has to beat $3.30, which actually was the high that it made in 2017, 2018, 2019. BNB needs to hit over $661. Cardano has to hit $3. Solana has to hit over $258. Dogecoin has to hit over 69 cents. Polkadot has to hit $53. Litecoin has to hit $359. And Matic has to hit $3. If we want these tokens to beat the all-time highs. Okay, it's not going to happen. For most of these tokens, it ain't going to happen. In fact, most of these tokens aren't going to exist. Then the question becomes, okay, if we know that these tokens aren't going to exist, then which tokens are actually going to exist? Because we should be putting our money in the tokens that are actually going to exist. Let's call a spade a spade. Let's have a heart-to-heart here. I know a lot of you are holding these tokens because you're a member of the community. Because you know that these tokens need to get back to their all-time high. Because you bought these tokens and you're so far underwater that it's actually worth your while to carry on holding the token. Because the token is going to bounce back. Well, let me tell you something. The token ain't bouncing back. The token ain't getting back to its all-time high. 99.95% of these tokens are not getting back to the all-time high. 99% of them actually aren't even going to make it to the next cycle. They're going to get buried in the graveyard of tokens. And there's a big graveyard of tokens. I couldn't find the statistics, but I reckon there's probably 30,000 tokens that have been dead and buried and will never see the light of day ever again. Okay. Now that we have an understanding, now that we're all looking in the mirror and saying, okay, cool. It's time to be real. It's time to put the bullshit aside, put the Twitter influencers aside, put the shillers aside, put the YouTube videos aside, put your emotions aside, and say to yourself, ask yourself some really tough questions. Is my portfolio full of tokens that are actually going to come out of the other side? Is my portfolio full of tokens that are actually part of a new narrative? Is my portfolio going to survive SEC attacks? Is my portfolio going to make it to the next cycle? And if not, I know it's painful. I know that your token is 99% down. I know that you've lost a lot of money. The token doesn't care. The market doesn't give a shit. There's no better time than today to swap that token for another token. And the litmus test is a very simple litmus test. Ask yourself a simple question. If I was starting my portfolio from scratch today, would my portfolio look like the one that I'm holding? Okay? Forget about what you're holding, what you bought it for, how far you're down. Ask yourself just one very, very, very simple question. If I were to start again today, if I were to come in today with $10,000 and to be able to hold $10,000, is this the exact portfolio that I would be holding? If the answer is no, then do me a favor, straight after the show, answer a couple of questions, rebuild your portfolio, ignore the emotion just for half an hour, just put all emotion aside, sell everything, take the knock, feel the disappointment of what an idiot you were for buying it so high, take the knock, feel the pain, put it into the right tokens, and then watch the right tokens go up. Simple. I did that. It was a tough experience, but when I was done, it was the most liberating experience of my life. I sold all those bullshit NFT gaming platforms. I sold all those bullshit launch pads. Even though I lost 99%, I sold a whole lot of layer ones. I don't want to name individual tokens. I dumped them all. It was hard. It took me so long. You know why it took me long? Because I was too scared to look at my portfolio. I went through a phase where I just didn't want to look at my portfolio because it was so far down. that looking at it would mean that I have to accept the reality. And then as the market started to go more and more and more down, and the bad token started to bleed more and more and more, which is exactly what's happening, one day I just said, fuck this, I just got to do it. And I sat down and I put the spreadsheet in front of the computer, and I said, you know what? Today is the day. And I removed every single emotion that I ever had for any token in any community, and I said, I don't actually give a shit. I'm actually just going to ask 5 questions. I'm going to ask 6 questions. And when I've asked those 6 questions, if the token doesn't hit those 6 questions in a satisfactory manner, I'm out. It was tough. It was tough. I sold 80% of my portfolio. I went from 60 tokens in my portfolio to 20. I don't remember the number. It was like one of the hardest days of my life because I had to accept the losses. But then I put the tokens in, I put the money into good tokens, and those tokens are starting to make money now. And I feel great about it. And I want you guys to have exactly the same feeling. So I'm going to share my spreadsheet with you. I'm going to share my methodology with you. And we're going to do it together. We're going to ask a few questions together. We're going to ask some tough questions. But first, you got to promise me something. You got to promise me something. You got to promise me that we're going to stop the bullshit. You got to promise me that today is the day. You got to promise me that we're not going to do this one day when the market goes up, because when I said that to myself, every time I said that, the next day, the bad tokens went down even more and the good tokens started to recover. And so what happened was there started to become this gap between the good tokens and the bad tokens. And then I realized that every single day that I was wasting was exactly that. It was a waste of a fucking day and a waste of profits. And the best time to have done this would have been yesterday, and the second best time is today, and the next best time is tomorrow. But if you delay after that, good luck to you on this journey. You ain't coming out. You're going to be like the tokens that went from $3 to 13 cents 6 years later. 6 years later, you're still holding on to 𝗬𝗏, the same bag, going, 𝗬𝗏 is going to change the world. It's you and like 4 other community members, and you're all in the Telegram chat going, yeah, they're going to finally close the deal. Bro, the team's gone. The team's moved on to other ventures. Okay? It's just you and 5 other people in the Telegram. That's what it is. It's just you and 5 other people in the Telegram. That's it. The rest are all gone. And you know, you start looking on Twitter. Like you start searching for the hashtag on Twitter. And like there's like, you start looking and there's like old comments. It's like, shit. Like, who's left here? And you realize it's like, fuck, there's no one here. Where is everyone? Okay, we've got to do this today. Let's just do it. So here are the questions. Look, I know I'm being like quite passionate about this, but I know what it feels like emotionally. I know what the emotion felt like for me to actually face the facts. And then after I'd done it, I'm like, I can't believe I didn't do that earlier. You know what it's like? It's like breaking up with an abusive ex-girlfriend. So like, you know, like when you're in the relationship, you hate the relationship. And then like you finally get the guts to break up with her. And then like when you break up with her, like you think like, oh, my life is so amazing now. Because you're not carrying that baggage. It's exactly the same thing. That's how you're going to feel. But you got to face the facts. You got to do it. Come on. Let's stop the bullshit. I showed you the stats. Okay. Out of all the tokens in 2017, of which there were like 80 billion trillion, these are the ones that survived one cycle. 27 of them survived one cycle. And 1, 2, 3, 4, 5 of them survived 2 cycles. That's it. End of story. Got to choose where you want to be. Okay, so now that I think you understand, and I think we have an understanding between us, I think what we should do is we should develop a model. We should think of a methodology. It's not willy-nilly. It's not like you sit there and you say, okay, which one am I going to buy? Which one am I going to sell? No. You have a methodology. You have a model. You put it in a spreadsheet. You be systematic about it. I'm going to share my spreadsheet with you, okay? So what we're going to ask is we're going to ask very simple questions. 1, 2, 3, 4, 5, 6. Okay, now there's 7 questions, okay? What are the 7 questions? First question that you ask is, does the token really have network effects? When I say network effects, the more people use it, the more value is added to the network exponentially. Example, the more people use Bitcoin, the more vendors accept Bitcoin, the more banks have to build infrastructure for Bitcoin, the more ETF companies have to try and cater for Bitcoin, therefore the more people will buy Bitcoin. And so every person that buys Bitcoin adds value to the network exponentially. First question that you ask is, does the token really have network effect? Network effect in terms of users, in terms of infrastructure, and in terms of developers. If the answer is yes, give yourself a big tick. Okay, next question. Does the token have a real community? And when I say a real community, I don't mean like 5-page shillers on Twitter that are being paid or doing their best to salvage their bags and that won't actually be here tomorrow when you actually need them to be here. Does the token actually really have a developer community? Does it have a real VC community? Does it have a real banking and institutional community? Answer honestly, put your hand on your heart. Don't tell me because there's some shiller on Telegram who's being paid money to be there or bought tokens or got OTC tokens at an early price. That's not a community. Okay? If it is, give it a tick. Next one. Next question that you ask yourself is, does the token have real users? When I talk about real users, I mean not people that are airdrop farming, not people that are there just because right now we're trading Solana, but does it have real apps, real users actually using the protocol for what it was designed to be used for? Yes or no? If the answer is yes, if it has real users that actually use it, in Bitcoin's case, as a store of value, just click yes. Okay, now we move on to the next set of questions. Is the protocol decentralized? And the reason why I ask if it's decentralized is because, let's be honest, if you bought a centralized shitcoin that is a team that was using a token instead of raising equity and it's not going to be decentralized, chances are the SEC is going to wipe that token out. And if the SEC doesn't wipe that token out, chances are the team's going to somehow run away with the money because they have no obligations to token holders whatsoever. So ask yourself a question. Is the protocol, are you here for the right reasons? Are you here because of decentralization? And if you are here because of decentralization, then are you actually invested in decentralized protocols? If the answer is yes, give it a tick. Next question. Ask yourself, will my token survive a regulatory attack? You can ask whatever questions you want. Questions are, is it centralized? Questions are, did it do an ICO? Questions are, is it proof of work? Questions. Will this protocol survive a regulatory attack? Yes or no? You decide. I know for sure that Bitcoin is going to survive a regulatory attack. Great. Give it a tick. Next question. Is the protocol actually making money? Is it actually generating real gas fees? Or is it like a pie in the sky idea that even if it does work, hasn't worked out a revenue model yet? We've seen lots of those in crypto. Because there are lots of protocols today that actually are making a lot of money. If I look at just this one over here, Ethereum on average makes 7-day average fees $5.8 million. Is that million or billion? It's million. Uniswap makes about $1 billion. Bitcoin, about $1 billion. BNB, $400 million. 𝗲𝗿 makes money. Arbitrum makes money. MakerDAO makes money. Time to start looking at these things through as businesses. There are also DeFi protocols that are actually making money. This is not an exhaustive list. But ask yourself a question. Is the protocol actually making money? Okay, now, you don't have to have all the answers here ticked yes. But in this case, I can say Bitcoin actually is making money. Okay, I showed you that I can verifiably prove that the fees on chain are $867,000. That's with ordinals, that's, et cetera, et cetera. Cool. The next thing that I see that Fred is, he says you read the value wrong. He says there were hundreds of thousands. He says, what is Fred talking about?
About the fees you just read.
Okay, next question. The question here is this protocol a new concept? Now, why did I say, is it a new concept? Because sometimes a protocol won't have network effects yet. It won't have a real community yet. It won't have real users yet. It won't be decentralized yet. It may or may not survive the regulators, and it's definitely not making money. But there is a time that you can invest in it if you think that it's a new concept that's going to change the way that we look at protocols. So I'll give an example, like Stargate. Stargate Finance, Layer 0, is a way of transacting that we haven't seen before, cross-chain transacting. Now, coincidentally, it is making a lot of money. So I actually found a chart for you guys that shows that Stargate is actually making a ton of cash. Here it is. It shows you that, the fees that Stargate is generating, it is actually making a ton of cash. But let's just say that it wasn't. That you could still invest in it because you're taking a chance. But then what you've got to do is you've got to know why you're investing in it. And you've got to say, look, it doesn't meet any of the criteria at all. Let's just make this a bit smaller so we can all just see the screen. There we go. And let me just freeze panes. Hold on. Up to row 2. And let's just freeze. Let's just freeze. There we go. Okay. So, it should have been column C. View. Let's unfreeze panes. Can we? No, let's put it here. Yeah. View. I don't know how to use Google Sheets. I'm much more an Excel guy. There we go. Okay. So now the question is, when you look at your portfolio, when you look at all of these tokens, you got to answer these questions. And if the questions don't answer very well, then you've got to have a serious serious heart-to-heart with yourself and get rid of the token and start again. All right, so with that in mind, you guys tell me in the chat which one we should do. Let's do them together. While you're doing that, I'm going to do Ethereum. So does ETH have a network effect? For sure. Does it have a real community? For sure. Does it have real users? For sure. Is it decentralized? For sure. Will it survive the regulators? Sure. Is it making money? Sure. Is it a new concept? No, it doesn't need to be because I've got everything else here. USDT, forget about it. BNB, interesting. Does it have network effect? Yes. Does it have a real community? Yes. Does it have real users? Yes. Is it decentralized? No. Will it survive the regulators? Don't know. Is it making money? Okay, hold on. Ask yourself a few questions. There's 3 red cells here. Do you want your money there? For me, no. Why? Because I'm very, very, very scared of the regulators. So I'm out. Okay, let's do a few others. I'm so scared to do Cardano. I'm so scared to do it because you know what's going to happen if I do Cardano, right? You know what's going to happen, right? Yeah. But you know what? I'm so scared to do Cardano. But let's actually do this together, okay? Now's the time to have a heart-to-heart. Now's the time to stop the rah-rah-rah and to actually go down to the facts. And I know the Cardano community are going to kill me and are going to hate me, but I'm going to do this anyway. So let's ask, does Cardano have network effect? Are there builders on Cardano? Oh, someone's phoning me. See, it's probably Charles. Don't do it, Ran, don't do it. Okay, so does it have real network effect? Okay, no. Does it have a real community? I say, no, but hold on. When I say real community, I don't mean rah, rah, rah. I don't mean rah, rah. I mean a community of builders. Does it have real users? You know, just for the sake of peace, let's just move on to another token. Let's just move on somewhere else. Let's just go somewhere else, okay? You guys at home, you guys should complete this exercise. You know, like when you used to go to school, and then they used to give you the thing and say, look, please complete the exercise at home. So please complete the exercise at home, okay? Let's look at some other ones. Okay, Solana. Let's look at Solana. Does it have network effect? I think it does. Does it have a real community? I think it does. People are still building on it. Does it have real users? Well, you know what? All I do is I actually don't guess. I go to the statistics and I look at the statistics and I say, hold on a second. And you can get this at artemis.xyz. Daily active addresses, daily transactions, DEX volume. Yeah, it pretty much ranks pretty highly on all of them. So, you know, hand on my heart, I tick and I say yes. Is it decentralized? It's got a very, very, very high Nakamoto coefficient. Okay. Will it survive the regulators? I don't know. I don't know. Right now, let's say no. Is the protocol actually generating fees? Sure. Is it a new concept? No. Okay, so it's cool. And you can go down this list as much as you want. You can go down this list as far down as you want. But this is the framework that I suggest that you guys use that to verify your portfolios. And if it doesn't tick all these boxes, do yourselves a favor and buy tokens that actually do hit these narratives and get out of all the garbage, so that when we look at this chart again in 5 years or 6 years, you don't go, still holding IOTA. I'm still holding Dash. I'm still holding, what are the other ones? There were so many of them. My goodness. Let's quickly. I think I'm still holding. I think I'm actually still holding a lot of these, to be honest, just because there were two. 𝗕𝗏𝗃, Verge. 𝗕𝗏𝗃. Market cap was 750 million. What is the market cap of 𝗕𝗏𝗃 today? It's got to be close to zero. Come on, let's look here. 𝗕𝗏𝗃. Market cap $126 million. It was 700 million 6 years later. That means you got 1/7 of your value 6 years later. Don't be that guy. Don't be that guy. The only way to do it, look in the mirror, have conviction, sit down, take what you need to take a whiskey, whatever you need to do, just do it. Implement the model. I'll drop a link below so that you guys have got the model. And then let's have a discussion again tomorrow. Someone says do AVAX. Okay, let's just do AVAX. Come, let's for shits and giggles, let's just do AVAX together. AVAX, where is AVAX? AVAX. Okay, so let's go through it. Now, I just want to say, I'm not the biggest fan of AVAX. You know that. I'm not against it. Just not my favorite token in the world. But let's do it together. Does it have network effect? I think it's 50-50. Let's just give it a tick. It's 50-50. Does it have a real community? 50-50. Does it have real users? 50-50. Is it decentralized? No. Will it survive the regulators? Who knows? Is it making money? You guys work it out. Go and do your research. Anyway, I think you get the gist of it. I think that's going to be the cycle. I think we are getting into a new cycle. When we get into a new cycle, if you're still holding old cycle bullshit, great time now is to sell. Let me tell you, a great time now is to sell. The other thing that I think is happening in this cycle is Gary Gensler. I think he's going to be out this cycle. And I was listening to Warren Davidson speaking yesterday. He spits facts. I just want to quickly play it for you. Let's just quickly go there. 11:37. That's the timestamp. Okay, so let me play this for you.
Need for the SEC Stabilization Act.
Yeah, so I think he does have it out for the sector. I think some regulators broadly do. I think there's a war on crypto. Barney Frank alluded to it in banking, right? He's like, Signature Bank didn't have a solvency problem. They had a problem with regulators who were trying to target the bank because they banked crypto. So you see people literally being debanked because they'll do something with the space. You know, there was under the Obama administration a term for that. They called it Operation Choke Point, and they're essentially rationing capital. And you know, this is kind of goes through Elizabeth Warren's office. You'll see Gensler kind of coordinate with Elizabeth Warren. A lot of the, you know, kind of Democrat dominated financial services space really is tied back to Elizabeth Warren. And, you know, motives are always hard to pin down. But what we can say is it's certainly bad for the sector, and it's wrong to say.
So he wants Gary Gensler out, and I think that's part of the cycle that's going to be out. But he is spitting facts. I mean, he's calling it exactly like it is. The other thing which I saw, which I think was very, very, very interesting, is this. This is a very interesting article. It was written by CoinGecko. They wrote an article around crypto versus AI jobs. And I read this article, and I saw two things here. The first thing is that we can see that AI, everybody wants to be on this AI jobs. Like everybody wants to get an AI job now, and like not many people want to be getting crypto jobs anymore, right? But more importantly, I dug into the actual countries. And you look at the 10 most interested countries in crypto jobs. It's the countries that are favorable to crypto. So Singapore, United Arab Emirates, Nigeria, Pakistan, Kenya, India, United Kingdom. If you look at AI jobs, the US starts to score in there. And so what it's saying is that Actually, in the US, people actually aren't looking for crypto jobs anymore because they just think it's not a nice place to be because the regulators actually destroyed it. Now, what does that mean? It means that the US ain't going to get the brains into crypto because it's basically destroyed the whole a crypto economy or whatever you want to call it. While we're here, I'll show you another interesting chart with us. So I see a lot of these interesting charts, probably worth sharing with you guys. So this is a very interesting chart. So the Wall Street Journal asked annual expected returns for assets, okay? And they said like the owners of the assets versus the non-owners. So it's so funny because if you look at like housing, gold, stocks, bonds, the owners of the assets and the non-owners kind of expect similar returns. So like if you own a house and you don't own a house, you expect similar returns. Or if you own gold or don't own gold, you like everyone's like saying, yeah, we kind of know what the gold returns are going to be. But when it comes to crypto, you got the degens, right? And they're like the holders are going like this. The holders are going, no, we're going to the moon, we're going to Lambo. And the non-holders are going, you guys are so lost. And it just goes to show, how, what's the word? When we buy into crypto, and we get this delusion. We get delusional. You got to be careful not to become part of the delusional, so to speak. One or two more things. I did see this, which is very, very encouraging for me. Ethereum-powered Visa credit cards are exploding. 2 models are emerging: cards that let you pay your monthly bill with a crypto transfer, cards that draw money from an on-chain smart account, which will swipe. So the reason why I like this so much is I know that crypto credit cards are very much being used at the moment. I did tell you guys that I went to Los Angeles last week, and I'm going to release a video this weekend, which where I only used my scallop card. So I used nothing but my scallop card, and I managed to get around spending crypto only, even though it's a fiat and crypto bank account. But there's something else that's probably worth talking about, and here, there's an airdrop here as well. So we have a new sponsor. The new sponsor is called MELD. What they are is they are a non-custodial crypto bank account. Okay, and I know that sounds like a crazy concept, but they've got a very, very, very smart structure where they are a regulated bank in Lithuania. They're a regulated bank in Lithuania, and you can store your crypto on-chain, but actually have a bank account that's linked to your on-chain non-custodial account. So it's like a regulated bank account. Get this, a regulated bank account linked to a DeFi or a self-custodial wallet. So it's like having a regulated bank account, but still holding all of your money in a non-custodial account. It kind of sounds like the best of fiat and the best of crypto. So if you want early access to test this thing, so we're not there yet. It's going to be a couple of months, a month or two. There's a link below. Click on this link below, and you could be one of the people that gets early access to this bank account. Now, to me, the concept is revolutionary. Why? Because you always hold onto your own money, but you get it as part of a regulated bank. Just think about what that actually means. So if you want early access to this, there's a link below. It's just click on the link below. Is a link like near the top, right? Amazing. Click on the link below. Sign up. You're not giving away anything. You're just signing up to get early access to when this happens. To me, this is the next level. This is something that on this spreadsheet over here would be like new concept. I'd click new concept and say, you know, maybe it doesn't have users yet or whatever else. Okay. So yes, do that. There's also an airdrop. If you are one of the first people that has it, you will get an airdrop, and apparently it's going to be a very substantial airdrop. So yeah, check it out. You're not giving them anything. You're not paying anything. You're just signing up. For to be one of the first. And I do think that this is a trend of being able to merge your fiat and your crypto into one account. Now, you know, our partners Scallop do that, but these guys did it in a non-custodial fashion, which is a unique new thing. Okay, then lastly for today, we have a guest in the studio. Valentin, he's here from Belgium. Yes. Come through. Man, very excited to have you here. He's been sitting here watching us do the show. Tell me why you came to South Africa, man.
Because of crypto school.
Tell me more.
I'm in crypto since 2017.
Okay.
And I started following you through James, and that's how I learned from Sheldon.
Talk a bit closer to that.
Yeah. Sorry. And so I took crypto school. And,
how was it? How was crypto school?
It was awesome. Yeah.
Really?
Really amazing. Yeah.
Tell me a little bit more. Why was it so amazing?
I'm a fundamentals guy, and I wanted to learn TA, and so it's a really good entry point.
Did you learn about how to fix your mistakes?
Yes, definitely. Yeah, and how to avoid some mistakes in the future.
Now, I want you to tell the truth. Did you fly all the way to South Africa?
Yeah.
Just to come and see us?
Yeah.
My man.
I got the email.
My man. I mean, he came all the way to South Africa from Belgium just to join the live event that everyone joined on Zoom, right?
Yeah, yeah. I got the email, said there's an in-person event, so I thought, why not?
Man, welcome to the fam.
Thank you.
Do you recommend that people sign up? Sorry, I see that the camera's trying to focus on me and you.
No, definitely sign up. Yeah, there's no shilling. It's only alpha, only knowledge, only learning, and a real community behind it.
And it's fucking free.
It's free.
It's free.
It's free.
Most people, hold on. Most people will charge you like $3,000 for a course like that.
Yeah.
It's free.
Yeah.
There's a link below. Sign up. There's a cohort starting in like 16 days. You can still make it.
And it's not only the videos pre-recorded. There's also always live sessions and real community, real sessions, real answers. It's brilliant.
Amazing, brother. Welcome to the fam.
Thank you.
Listen, and to you guys, I've got to jump onto Twitter Spaces now. So I'll see you guys again on the Twitter Spaces. Otherwise, I'll see you guys again tomorrow. Before I go, just remember that now's the time to look in the mirror. Now's the time to take the hit and to get rid of all the garbage in your portfolio. Let's quickly just check on my position quickly. How is my position doing? My short, okay, $7,000 up. I'm going to keep an eye on it. See you guys again in a bit. Until then, trade well, my friends.
Yes, think of me as that friend you can always ask for directions even if you've been there.